My guest market monitor this week is Mark Leibovitz, Chief Market Strategist for vrtrader.com. And welcome back to Nightly Business Report. Mark?
Glad to be here, Paul.
You have been bearish on stocks for the last 3 years, and rightly so, as it turned out. But have you seen any recent signals that the market is ready for a turnaround?
Well, of course, Paul, we had the, as I call it, volume reversal about a week and a half ago off the 7,400 level in the Dow, and that was a trading signal. And since then, the market has been resilient, and NASDAQ stocks have been holding up. So that's a recent positive, and maybe in a way it mirrors, in our previous interview, we were coming off that October low. Similar type pattern. You might be entering or have entered a month or two period where prices will have a little upward bias. But that's not a clear enough signal to say, and I'm repetitive from what we did back in October, that a bull market has started.
So in other words, you're saying that we're overall in a secular bear market, but it's punctuated by occasional cyclical bull markets.
Absolutely. That's what we're in. Now maybe this one will exceed the 1,500 points that we saw back last July, or the 1,200 points we saw after the October low. We've already done 1,100, as you know. Maybe that's what this is about, but a little more time has to pass. Maybe we'll go a little bit higher, but I still view it as a bear market bounce, and certainly tradable if you can take advantage of it.
So you have to be very nimble in and out, and don't hold on for anything more than, what, about 10 or 15% appreciation? Is that it?
Absolutely. In fact, if we go 20 and the press jumps on the fact that it's 20%, and that 20% is a magic number, as you know, and we've suddenly entered the new bull market, that might indeed, from a contrarian's point of view, be a sell signal. So I look for keys like that, too, when you get too much euphoria at the wrong time. And as you know, I'm pretty good on this market timing.
Right, you are. As a matter of fact, Timer Digest named you within the top 5 for the last 10 years in intermediate timing. Is that it?
Actually, number 1 in the last 10 years.
Okay.
Last 10 years. I think I'm number 1 also in the 5, but I have to check that ranking.
Well, I congratulate you. That's quite a record.
Absolutely. Thank you.
So, how do we make money now, Mark?
Well, primarily, I think you should be in the gold stocks. We started adding those again.
You liked those in October on your last visit with us, and they've done well, and you still like them.
Yeah, we had a nice pullback, but for our clients, we had a sell signal in early January, and we unloaded quite a few of them, and now we're starting to nibble again. I'm not quite sure if this is the move that's going to carry us for 6 months. We may trade up for a few weeks, pull back, and then have another move up. But this is a high confidence play for us if you take a 5 or 6 month perspective.
But usually when the golds are doing well, the rest of the market isn't.
Well, that's my perspective. In fact, I'm one of the guests that was interviewed in your mid-December Nightly Business Report yearly forecast, and I was the only bear in there. Everybody was bullish, and officially I've stated whether I'm going to hang myself on this number or not. Only time will tell, but 6,800 is where I see the Dow going by the end of the year.
Right. What are your favorite gold stocks?
Well, gee, the list is so long.
But your favorites?
Well, Newmont, because it's a blue chip name.
They had earnings out today that were almost double.
And the stock did very well.
Yes,
Kinross, KGC, Glamis, GLG, Agnico Eagle, AEM, Rand Gold, RANGY.
Do you personally own the stocks that you're mentioning here, the golds?
Yes, I have. I trade these absolutely.
How about some of the index funds? Do you dabble in them at all?
Yes, well, we do what's known as tactical asset allocation for some clients that we advise, and we use bear funds and bull funds along with the exchange-traded funds to time the market. So the tactical asset allocation is very important. In fact, this is a great way for listeners to make money. In the last 3 years, if you were allocated in a bear fund, for example, you'd have done very well. If we get a rally here into mid-year, jump on the bear funds, another big wave coming down.
Okay. So in other words, basically when you see a decent upturn, you sell into it when it gets up around 10 or 15% and vice versa on the downside. You buy it.
If sentiment becomes too extreme on the positive and I get one of my negative volume reversals off the top like we did last March, yes, it all comes into gear for us.
All right, Mark, I wish you continued success. Thanks for being with us.
Thank you, Paul.
My guest market monitor, Mark Leibovitz, Chief Market Strategist for vrtrader.com.